Welcome back to the channel. If you've ever felt your heart race watching Bitcoin's price plummet, or felt paralyzed watching Ethereum dip 10% in a day, today's video is for you. We're diving deep into why your emotions are your biggest obstacle in crypto investing, and how mastering the psychology behind those emotions can turn you from a fearful investor into a confident, strategic winner. We all know crypto is volatile. Prices swing wildly, and headlines scream crash one day, moon the next. But here's the thing, your real battle isn't just the market, it's your mind. Fear, greed, anxiety, these emotions can cloud your judgment and sabotage your investments faster than any market dip. So, how do you conquer those emotional waves and make smart decisions no matter what the charts do? Stick around because today, we're uncovering the psychological secrets that top investors use to win their emotional investing battles, and how you can apply these strategies to master your crypto fears for good. Let's kick things off by understanding why crypto triggers such intense emotions. Why crypto feels like an emotional roller coaster. Cryptocurrencies are unique. Unlike traditional stocks or bonds, crypto is decentralized, often less regulated, and driven heavily by speculation, hype, and sometimes even misinformation. That creates wild price swings. Imagine this. One day, your favorite coin is skyrocketing, and you feel unstoppable, like you've discovered a treasure chest. But the next day, bad news drops, prices tank, and suddenly you're clutching your phone, heart pounding, wondering if you'll lose it all. These emotional highs and lows come from very real, deep-rooted psychological triggers. Fear of missing out, FOMO. When prices go up fast, you worry you'll miss your chance to profit. Loss aversion. Psychologically, losses hurt about twice as much as the pleasure of gains feels good. So, a dip feels devastating. Overconfidence and confirmation bias. When things are going well, you start to believe your decisions are always right and ignore warning signs. Herd mentality. You buy because everyone else is buying, and sell because everyone else is panicking. These emotions lead to behavior like panic selling during downturns or chasing pumps, which often results in buying high and selling low, the opposite of what any investor wants. So, how do you break free from this cycle? Here's the first secret. Awareness is power. You can't control what you don't recognize. The moment you understand, hey, I'm feeling scared because of loss aversion, or my FOMO is making me impulsive, you gain the power to pause and rethink. Secret number one, emotional awareness. Become your own psychologist. Start by tracking your emotional state during trades and market movements. Keep a journal or use voice notes. Record questions like, what am I feeling right now? Fear? Excitement? Anxiety? Why am I feeling this? Am I reacting to data or just noise? Over time, you'll start seeing patterns. Maybe every time Bitcoin dips 5%, you panic sell, or when a coin pumps 20%, you immediately buy without research. Recognizing these patterns allows you to take a step back and avoid knee-jerk reactions. Secret number two, build a clear investment framework. When the chaos hits, having a clear plan shields you from emotional decisions. This means defining your goals. Are you investing for quick gains, long-term wealth, or something else? Deciding your risk tolerance. How much loss can you emotionally and financially handle without panic? Setting entry and exit strategies. Know when you'll buy more, hold, or sell, and stick to those rules. Imagine this like your personal crypto compass. When the market storms rage, you check your compass instead of chasing every shiny headline. Secret number three, use premortem thinking. This is a powerful psychological trick used by successful investors. Before making a move, imagine your investment failing catastrophically. Ask yourself, what could go wrong here? How would I feel if this happened? What could I do to mitigate those risks? By pre-planning for failure scenarios, you reduce fear of the unknown and make more rational decisions. Plus, when you've prepared for the worst, you're more likely to hold through volatility. Secret number 4, control your exposure and diversify. Emotion tends to hit hardest when too much is on the line. If one crypto coin represents 90% of your portfolio, a 50% drop will feel like a nightmare. Instead, spread your risk. Invest in multiple coins, stable coins, or even other asset classes. Diversification takes pressure off any single position and can keep your emotions in check because your portfolio won't swing wildly on one event. Secret number 5, practice mindfulness and detachment. This might sound counterintuitive. How do you detach when you want to win money? The key is to adopt a mindset where you view your investments as tools, not extensions of your self-worth. Mindfulness techniques, like meditation, deep breathing, or simply stepping away from screens during volatility, help you observe your emotions without acting on them impulsively. The more you practice stepping back, the less you let fear or excitement take the wheel. Secret number 6, avoid the news cycle's emotional traps. Crypto news can be a double-edged sword. It's essential to stay informed, but constant exposure to dramatic headlines and social media hype can magnify emotional reactions. Limit your news intake deliberately. Set specific times to check updates and avoid doom scrolling or chasing every rumor. Focus on reliable sources and verify before reacting. Secret number 7, keep a long-term perspective. Volatility is the norm, not the exception in crypto. Remember that even legendary investors like Warren Buffett emphasize time in the market, not timing the market. By maintaining a long-term view, you budget for short-term losses and focus on growth over months and years, not panic during days or hours. Let's summarize how you can master your crypto fears. 1. Become emotionally aware. Recognize your feelings and their triggers. 2. Create a clear personal investment framework based on goals and risk tolerance. 3. Use pre-mortem thinking to anticipate and prepare for potential downsides. 4. Diversify your portfolio to reduce risk and emotional impact. Practice mindfulness to stay calm and detached from impulsive emotions. 6. Limit and curate your news consumption to avoid sensationalism. 7. Adopt a long-term perspective to ride out volatility with confidence. Before we wrap up, here's a quick personal story. I remember early in my crypto journey, I once saw Bitcoin drop 30% in a single day. My initial reaction was sheer panic. I considered selling everything to cut losses, but then I paused and asked myself, is this really the end of Bitcoin? What does my research say? How much risk am I willing to hold? After taking that moment, I held through the dip. Months later, Bitcoin not only recovered, but hit new all-time highs. That experience taught me the power of mindset over panic, and it's a lesson I want you to carry forward. If you found this video helpful, hit that like button, subscribe, and ring the bell so you don't miss future videos on mastering both tech and finance. Got your own emotional investing stories or strategies? Drop them in the comments. We learn best together. Ayun, thanks for watching, and remember, your biggest crypto opponent isn't the market, it's your mind. Master that and you're already winning. See you in the next video.